Welcome to the weekly market update. First, with the risk disclaimer. I'd like to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robot Signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Here are the events that we will be looking at this week. On Tuesday, 19th of January, tomorrow at 9:30 a.m. UK CPI, at 9:45 p.m. New Zealand quarterly CPI. On Wednesday at 1:30 p.m. US core CPI. At 3 p.m. Canada interest rate, Bank of Canada interest rate. On Thursday, 12:45 p.m. ECB interest rate and rate press conference at 1:30 p.m. On Friday, 22nd, at 9:30 UK retail sales, at 1:30 Canada core CPI and core retail sales. We have a busy week full of events, but last week in commodity markets, the oil falling continued with WTI and Brent closing last week below $29. The acceleration of the decline was in anticipation of sanctions being removed on Iran, allowing them to flood the oil market, which is already suffering huge declines as stockpiles and production are at record levels. This saw interest in gold that go up as a safe haven and break above $1,100. But when you consider all of the negative sentiment across global markets, then the upside has to be questionable. In United States, a week of red figures added further pressure to investor sentiment, which had already seen traders move to safety in light of lower crude prices and Chinese intervention. Initial jobless claims continues to suggest it has seen a decline at multi-year lows. So to see it rise again only adds to concerns the job market may have had its run. Retail sales on Friday and industrial production added to the negative sentiment, whilst global stocks are dangerously close to breaking to new lows and confirming technical bear markets. In Europe, German industrial production was yet another disappointment. Investor confidence also declined to its lowest since February 2015. In China, China's trade balance data last week saw imports and exports contract less than forecast. Also, falling oil markets continue to weigh on investor sentiment. In UK, there were no monetary policy changes from Bank of England. However, a key driver for recent pound weakness is the fear of Brexit. Weak manufacturing and industrial production data certainly did not help either to send the pound dollar down to its lowest in years. Judging from price action today, it will not be. So I expect the pound to keep going in this downtrend. In Australia, employment was stable compared with previous release, volatile reads, which saw 1,000 job contract compared with minus 10,000 expected, and the unemployment remained at 5.8%. And now we can see Australian dollar back below 70 cents, as you can see in the chart. I expect this trend to continue in the coming weeks. The dollar will keep going down. Now, with the events that we should look at, first news with us today, UK CPI, which will be released on January 19, tomorrow at 9:30 a.m. London time. UK CPI should provide some directional push for the sterling because Bank of England is now expected to keep rates unchanged at least for the first half of the year. UK CPI forecasted at 0.1% as previous release. And we can see it's for almost 1 year, the UK CPI goes around 0. Last release was 0.1 and it was around 0 almost all 2015. How to trade this news? We are looking for a variable deviation of 0.3%. The deviation number is the difference between the actual release and the expected release. So the expected release, the forecasted release is 0.1%. So we'll look for variable deviation of 0.3%. So if the inflation number or CPI, consumer price index, remained above 0.4%, we will make rise option of the pound. But if the inflation number decreased to minus 0.2% or less, we will look to make full option of the pound. And even with the slight difference of 0.1 as deviation, market usually overreacts. But if our deviation is hit, there is a strong possibility that the market will move more than 80 bips. So how we will treat this news. We will look at deviation for deviation of 0.3. So we will make rise option of the pound against the other weaker currencies at 0.4%, and we will make fall options if the actual release comes out at minus 0.2%. We will be looking to trade this news using after news retracement method. We will wait at the time of the release. We will wait for the release, and then we will wait for the reaction of the market spike, and then wait for a decent retracement of the market before making the option. But if we don't get the deviation number, as always, no deviation numbers, we expect the market to follow the pre-release market condition and sentiment and just follow the pre-news trend. We follow it if we don't get our deviation numbers at 0.3. And if the market keeps its current direction downwards, so if we don't get our deviation number, we should make fall options. Second event, tradable events this week is New Zealand CPI quarter release that will be released on January 19th at 9:45 p.m. London time. 9:45. New Zealand CPI is a quarterly release, and judging from recent drop and the continued pressure on commodities, I don't really expect to see a strong release. I expect weak release for this news. Comes out of New Zealand. The inflation numbers from New Zealand are expected to be weaker even than expected. It's forecasted at minus 0.2%. Previous release was 0.3%. How to trade this news? Our focus will be on the headline CPI number. If we get a better release of 0.1% or better, we should be looking to make a rise option of the New Zealand. If we get a lower release, minus 0.5% or worse, then we will see the New Zealand dollar moves down and we can make full option. Usually, if our deviation figure is hit, we could expect the market to move more than 50 pips within next 30 to 90 minutes. So we will make rise option of the New Zealand dollar at 0.1% or more, full option at minus 0.5% or less. We will use the retracement trading method to trade this release. As usual, we will wait for the deviation number and wait for the market to move with momentum first and wait for a decent retracement before entering the market and buying the option or placing your trade. US core CPI will be released on January 20 at 1:30 p.m. London time. US core CPI is expected to be around the 0.2%, and with the federal already hiked rates and now on the fence for further policy normalization, a strong release will be positive for the dollar. It's forecasted at 0.2%. Previous release was the same 0.2%. Our minimum tradable deviation for this release is 0.2%. If the release number, we will look for the core CPI. So if the core CPI number decreases to a minimum 0% or worse, then we will make full option of the dollar. If the core release is 0.4% or better, we will make rise option of the dollar. As we can see, usually the deviation number or the change in the releases around 0.1% since 2010 and more. So usually with difference of 0.1%, market usually exaggerate its move. Once again, we are going to focus on the core figure. Core figure is the CPI, Consumer Price Index, except food and energy, not the headline CPI. So we look at the core CPI. 0.4 or more, we will make rise option, full option at 0%. We will trade this release using after news retracement trade method. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. So we look at the trend just before the news release, especially last hour. Before the news release, we will look at the trend. If we don't get the deviation number, we will just follow this trend. Bank of Canada interest rate decision will be released on January 20 at 3 p.m. London time. Bank of Canada interest rate is likely to be cut again. Will be cut or expected to be cut to 0.25. Judging from the sharp drop of the Canadian currency, and the constant pressure on crude prices, oil prices, Bank of Canada may have no choice but to go ahead with further policy easing. We will only trade if there is a surprise. It's forecasted at 0.25. Previous release was 0.5%. So how to trade this news? Most analysts agree that Bank of Canada will cut rate to 0.25%. I will be trading this release with a 0.25% deviation. So in the event of the surprise and it hikes the rate, it's almost guaranteed that we will see strong market movement immediately after the release. However, in all reality, Bank of Canada is unlikely to surprise the market, especially considering recent economic data and the crude oil prices. So we will make rise option of the Canadian dollar at 0.5% and full option at 0%. If we don't get the deviation number, I expect the market to follow the pre-release market trend as usual, and the Canadian dollar will keep the trend downwards. If it keeps the same trend at the time or before the news release time. UK retail sales will be released on January 22nd at 9:30 a.m. UK retail sales is expected to come in at minus 0.1%, and you will be looking for a minimum deviation of about 0.5%. I would only make rise option on the pound if we get our tradable deviation due to recent bearish sentiment on the sterling. So it's forecasted at minus 0.1%. Previous release was 1.7%. How to trade this news? The monthly retail sales report is a direct measurement of consumer activities at the retail levels. A higher release is generally good for the economy. Higher retail sales good for the economy and for its currency, for the pound. A lower release is considered negative for the economy and for its currency. Our tradable deviation or surprise factor for this news is 0.4%. 0.4% to make rise option on the pound, and minus 0.6% to make fall option on the pound. You will expect the pound to get stronger at 0.4 or higher, and it will keep its trend downwards at minus 0.6% or worse. Considering that we are expecting minus 0.1% figure, I would recommend only to make rise option, especially with rise option, if the figure is at least 0.4%, because it needs a strong number, strong figure, strong actual release to change the current direction of the trend downwards. So not less than 0.4% to make rise option. And we will trade it as usual using after news retracement method. If we don't get the deviation number, I expect the market to follow the pre-release market trend. The current trend is downwards now, but we will watch carefully before the news release and decide at this moment if we see the direction is upwards and we don't get our deviation number upwards and no deviation number, so we'll make rise option after the retracement. If we don't get our deviation number and the trend is downwards, so we'll make full option of the pound after decent retracement. Canada core CPI will be released on January 22nd at 1:30 p.m. London time. Canada core CPI is likely a high impact release for Canada. Its consumer price index, index for the inflation. But since it's released along with the core retail sales, they will be released at 1:30, both of the news. I would pay close attention to both releases before taking a trade or making our option. It's forecasted at minus 0.3%, the same as previous release, minus 0.3%. How to trade this news? Our deviation for this release, based on historical track record, it will be around 0.3%. Therefore, look for tradable figure of minus 0.6% or worse to make full option, at Canadian dollar or at 0% or better to make rise option for the Canadian dollar. So if it's a dollar Canadian dollar, it will be full option. So we'll make rise option at 0% or better and full option at minus 0.6%. We will look at the core CPI and also at the retail sales that will be released at the same time. Keep in your mind to look for an after news retracement trade for this release. As usual, we will wait for the release, then the initial market move, and when we will look at the release, we will look at the core CPI, Consumer Price Index, core figure, and we will have a look also at the retail sales. And then the initial market move and wait for a decent retracement before buying the option. As usual, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. I wanted to remind you, if you missed the webinar or want to watch again, you can watch it at binary.com YouTube channel. You can also find instant updates of the news at resource page at my website ihabjubil.com. Go to my website ihabjubil.com, press resource page, and you can see instant automatic updates for the news in the real time. So then I would like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.